All right. Good morning, everyone. Let's kick it off. Okay, so we got new all-time highs, baby. Closing the S&P 500. New all-time closing high, if I'm not mistaken, about 2.5, 3 points above previous closing highs. S&P continuing on that track this morning. We're up another 5 points on the S&P futures as we speak. FTSE, DAX, everything bid up just a little bit this morning. Nothing really there to drive it. I have no idea. Besides Greece being able to make their payments yesterday, in the short term, I have no idea why the market just kind of took off in the middle of the day like it did. I think the market volumes across the globe yesterday were exceptionally light, but it did what it did. We took out the highs. We didn't do it on volume, but we still took out the highs. There were a couple data points out yesterday. We had producer prices, which were softer than the expectation. In fact, they fell 0.4% versus expectations of a 0.1% rise. So that was a little bit hawkish. A little bit dovish for the rate hike camp. And then you had initial jobless claims, which actually came in lower. Continuing claims continuing to fall. So that was maybe a little bit hawkish for the interest rate cycle. So we got a little bit on both sides, but I think the PPI number actually is maybe slightly more important at the moment. So, we've seen a real yo-yo in the last 2 or 3 days, 4 days in Treasury yields out of the States. Yesterday or the day before yesterday, we had traded back up to 228 again. We're at about 307 on the 30-year, and we just haven't been able to kind of hang on to them. We just dropped to a tick below 3% on the 30-year yields, and we're back down to 220 on the 10-year. And I think that's, the market's obviously been following that around a lot, and the fact that we haven't been able to continue on and to break out higher and I think it's mostly because of the data points, has been what's, in my mind, allowed the market to continue to rise, but in an unconvincing fashion because everyone's a bit nervous, So anyway, moving on into the Asian session, we actually have mixed action this morning. Shanghai was down 2% for whatever reason. Like we said, it usually does the opposite. Hang Seng up about 0.5%. We had Tencent up, trading about 1.25% up higher this morning. Australia rising a little bit, mining stocks drifting up a little bit. We did have the Australian dollar that's backed off of quarterly highs last night. And the Nikkei up a little bit as well. But once again, there's zero leadership in Asia. I don't think that we will get any leadership in Asia unless it's negative news unless it's really surprising news out of China. And so there we sit waiting for the U.S. and Europe to kind of tell us what's going to happen going forward. Charts of interest today, this falls in line with our data point that we got yesterday. And, this is the one thing that I think is you can't even argue anymore. That one of the big pieces that Bernanke was arguing for a long time, and Janet Yellen was also making a big point of her speeches when she first came in, was that employment, it still doesn't look right. There's not wage growth, and we're still not at full employment yet. If you look at the continuing claims number, we're at the lowest level in continuing claims since September of 2000. Okay, so it's actually it's impossible to make an argument that we're not back at full employment. We actually, some guys actually have come out recently and said that we may be at, past full employment already. We're still at zero. Obviously, we're not seeing inflation at the moment. Wage growth started to pick up as well. So the only real thing that we're missing, I think, is growth, and maybe we saw a little bit of a once-off blip for this quarter. So if we start to see a pickup in any of the other sides of the data points, be it in inflation, and inflation's obviously low because of, food and energy's come down because of oil. When we start to see a pickup in any of those pieces, I really think that it's going to give the Fed the ability to lift off, but it may still be, 3 to 6 months before, maybe 7 months even before we can see that again. All right, corporate action. We've got RPL, which goes ex-div on Monday. Billiton, important because today is the last day to trade Billiton to get the share split for the South 32 listing. So they're going to break away assets, all the South African assets, and maybe a couple other the crap assets are going to fall into the South 32 holding. And so we're looking at today is the last day to trade. I think you'll only get your stock in a week or so. But just keep that in mind. There may be a couple people that run for it today ahead of the in order to get the unbundling. Right. We had PPI numbers out of Japan this morning, dead in line. We've got U.S. Empire manufacturing, industrial production, and University of Michigan sentiment numbers out later in the States today. All right, let's get into the maps. We've got a lot to look at today on the maps. A lot happening yesterday. Yesterday was probably the lowest volume day I can remember in a decade of trading, unless there was, some sort of holiday around, maybe in December. Otherwise, literally the lowest volume day I can remember. There's absolutely nothing happening. That's quite eerie. Anyway, we've got U.S. dollar rand down here at 11.80, coming back in yesterday to test this support right on the nose. You can see we're already pushed a couple cents off of this level. This level has been an absolute brick house of late. Since since basically 2015 for the most part. Since we've gotten above it, we haven't been able to drop it on a closing basis. I think that's really important. Still definitely looking bearish on the outlook for the rand. We'll go in part of that. We're going to show a couple retailers on the back of that today. The first one being Mr. Price, which yesterday gave its first close below or first convincing close below 245 support. There's definitely major support level here, support resistance level at 245. What was support now becomes resistance. These retailers traded really poorly yesterday, especially with a stronger rand. I have no idea why. We've actually got the 10-year yields on South African bonds dropping below 8% as of this morning, which I would think would be a positive for retail stocks, but yesterday they really just dumped them overboard. They were real underperformers for the most part. Anyway, so we're below the 245 level. Mr. Price is a very, very important level to see if there's any follow through to this. The 200-day is only just below us here, down around 234, so it's not very far till we test that 200-day. I think if we back out a little bit further as well, you can see we're dropping major trend support as well. Not dramatically, but we still are dropping that trend support. And so yeah, I think that this is really it's really an important level here, dropping at 245. If we can continue to push a little bit lower, there's actually quite a reasonable, significantly lower target, and especially if we get below that 200-day moving average. So I'd say the worst case scenario, if we stay below this level, we'll probably come in and maybe test 220 in Mr. Price. All right, we'll look at Tiger Brands this morning as well. Tiger Brands yesterday came out with poor earnings. They're expecting growth of I think at around 6 or 7%. They came in actually a negative 2%. And we've got a major level here at 300, which you can see it's quite obvious. We dropped that, and we looked like we were going to absolutely bomb out from there, but we managed to hold it on a closing basis. There just really wasn't that much selling and able to follow through and push this thing lower. But 300 is definitely our line in the sand. We need to see if it can close below 300, and if it can, then I think we've got a significantly lower target. I would take maybe the height of this this bounce off the previous level of 300, which would be about 25 rand, giving us a target of 270 in Tiger Brands. All right, look at Discovery as well. Discovery dropping some sort of trend support also. So some of these really high flyers have come back, and they've actually dropped down below some of their trend lines. Some of them are starting to drop support, like the Mr. Price. Discovery now, I mean, we're 20 rand off the high in Discovery. I mean, it was so overbought, it was ridiculous. But now we're getting very close to being oversold. And I think here at about 120, there's some real support. That's where we broke out. You can see there that little continuation move, and then we came back and tested it, and then just exploded to 143 odd. 120, there's definitely support, like we said. If we do get below 120 somehow, maybe we can come in and test the 200-day. But for me, I think 120 is definitely major support. We'll have pulled back 20% off the highs. It's hard to see it's doing too much more than that in the near term unless the market's getting obliterated. Next one we'll look at is ShopRite, and this is going to kind of start our Head and Shoulder presentation off right now, because yesterday we had a ton of stocks that went into Head and Shoulder formations, and nice looking Head and Shoulder formations as well, at least on the shorter term charts. We've shown this one before. recently. But we dropped 165 yesterday, and we did so convincingly. We did so with the rest of the retail sector under pressure. And 165 is definitely a big level. I think, obviously you can see where the neckline is here. This is a massive head and shoulder setup, which would take us all the way down probably to the lows if we were to drop the neckline around 150, call it 153. But we've still got a long ways to go just to get down to test the neckline. So the 200-day comes in right around here at 160 and a half. We're going to have to watch this thing play out. It's not straightforward just because we've got this head and shoulder set up. I think the 165 level, if you want to try to play it short of that, maybe with a stop just above 165 on a closing basis, that might be a decent way to play it if you want to try to preempt the setup. Otherwise, you need to wait for this neckline to drop before you can really start to play aggressively on the short side. All right, and the next set of head and shoulders that we're going to look at is one being Impala. So Impala, these are 30-minute charts here, every one of the ones I'm about to show you. This thing obviously came out with production numbers yesterday. I didn't think the production numbers were great, and I had nothing to compare it to what in terms of expectations, but just in general, I thought that they were a bit soft. Obviously, Goldman Sachs didn't think that. They came out and upgraded them to a buy this morning. Either way, the neckline on the head and shoulders here at 65.50. And right now, you'd have to expect that with Goldman Sachs coming out and upgrading them to a buy, that they'll open up even higher than this level this morning. But 65.50 is our level in the sand. If there's, for whatever reason, if we don't close above 65.50, then I still think that this head and shoulder is intact for a significantly lower target down to around $60, even south of $60. The next one on the 30-minute we're going to look at the head and shoulder is Sasol. So, sorry, let me back this out a little bit. There you go. You can see here Sasol also it hasn't dropped the neckline here, but definitely a nice looking head and shoulder as well. So we spent a lot of time topping out up here around, sorry about that, around 490, and the shoulders up here around 480, and then the neckline down around 455. So yesterday we actually traded a 457 intraday. We bounced up on really light volume throughout the day. There's been a seller out of the States the last couple sessions, even with the States pushing up yesterday. Sasol drifted lower the entire session. Light sweet dropped below 60 yesterday, but not convincingly. So anyway, this is something to watch. Definitely a nice head and shoulder setup here. So if we drop 55, we could really start to see some selling come in on Sasol. And then the next one we'll look at is Astor, which also a little bit of a head and shoulder as well. Managed to regain the neckline yesterday into the close, but I think below 110, there's definitely a head and shoulder setup here, maybe to take us to a little bit lower levels. And that's it for today, guys. Good luck out there.